Good morning, investors. Welcome to the Real Estate Investor News Channel, where we go over the top real estate news that are popping. Today is Friday. What is today? May the 17th. Welcome to the weekend, everybody. Let's enjoy it. Let's have a great time. I think it's supposed to be kind of rainy weather, but we are still going to enjoy the weekend. For today, I got three amazing stories for you guys. The first one being builders are finishing more and more homes, but permits have been flat. So let's see why that is. For the second story, I got, let me scroll up. Goldman Sachs launches 7 billion real estate debt fund. Everybody's running away from commercial real estate, but Goldman Sachs right now, they just started a fund. So let's understand why they're doing that. And for the third story, we got a new law in Hawaii, in Maui, I think it is, governing tenant screening fees now in effect. So let's see what's going on in the landlord tenant world and how does that affect other states in the US outside of Hawaii. So before we go into that, please be sure to subscribe to our channel on YouTube. Hit the notification bell so you know when we go live and when I upload a video of a story that's popping or that's hot. Yeah, please subscribe. And if you're listening to this on Spotify, Apple Podcasts, please be sure to subscribe on there. That's how we grow and that's how you support this channel. Thank you very much. Let's get right into it. For our first story, we got, it says here, while housing completion surged in April, housing starts only increased modestly and building permits declined. Both building permits slipped to the lowest level since the last summer. Now we know obviously there's been a shortage of uh, uh of new house builds, so I'm inclined to think. I mean, nobody knows what's going to happen with real estate, so I think that's what builders are really kind of like slowing down because they have no idea what's going on. You guys know what happened in COVID. Materials. I mean, it has nothing to do with interest rates, but materials. They couldn't get materials, so there was a lot of houses. You know, sometimes they were predicting that. For example, my personal home, it was supposed to be completed in 6 months. It was completed in a year because of material. So, like, builders are probably taking back, stepping back a little bit to see what the Fed are going to do in June when they announce if they're going to raise the rates or cut them. Anyway, it says here 1.44 million versus 1.48 forecast and 1.467 last month for building permits. So they really they predicted more permits than actually went into effect. And then housing starts was 1.36 versus 1.42. So they did not expect they expected more houses to be started, but again, they're taken back because of what's going on in the economy. You see here this chart. Yeah, you guys can see my screen. Housing starts kind of like went up a little bit because again they already had a whole bunch of permits probably going on, but you see building permits are reducing slightly. So we'll be interested to see what next month look like, or I guess this month really when the data comes out next month. So keep an eye on that. And again, if you want to continue tracking this, just hit the subscribe button, follow us so you can know exactly what's going on there. For our second story, we got Goldman Sachs, which is one of the biggest banks in the US, launches a 7 billion real estate debt fund. So let's talk about that. This fund includes 3.6 billion from third-party investors, like any other ones that you see out there, and 1.4 billion of Goldman Sachs owns capital. And that's huge. They're putting some of their own, I was gonna say meat on the bone. I don't know if that's the proper way to say it, but anyways, they're putting some of their equity in there too. So they're willing to, excuse me, when an operator does that, when a bank in this case does that, that means they feel more confident because they're willing to put part of their capital into it. So that makes investors feel better. And honestly, most likely they will treat that fund like it's their own baby because their money is tied up in that as well. So that's a good sign. Anyway, it says here, West Street Real Estate Credit Partners 4 aims to provide notable real estate debt financing. This is the fund that we're talking about. The fund will focus not only on North America and Europe, but also extend to Asia Pacific regions. Interesting. The fund approach is to originate, underwrite, and manage loans that are primarily secured by real estate undergoing significant transitions, such as redevelopment or refurbishment. Now, this part was super interesting because we know there's a lot of places that, number one, either started construction and haven't completed yet, or places that they had a plan to create office space, but now they had to turn it into multifamily commercial development. So I'll be interested to see. We got to keep an eye on this story because I really want to know what they put these funds to. I don't know if we'll be able to pinpoint it, but that'd be very interesting because it says here that they they're going to invest in real estate undergoing significant transitions such as redevelopment or refurbishment. That's the interesting part that we got to keep an eye on. It says here with $2 billion in leverage, the fund total lending capacity reaches over $7 billion, with 1.8 already combined committed to various projects. Goldman Sachs aims to achieve a return of 10 to 12% after fees, which is insane that Goldman Sachs is offering this. I mean, honestly, 10 to 12, sign me up. Like, I mean, not really. I don't trust them. But anyways, seriously, I mean, them offering this is really, really interesting. And to close out the story, it says here, traditional banks have scaled back their real estate lending in response to market volatility. Private lenders like Goldman Sachs are increasingly taking center stage. And that's the interesting part. Goldman Sachs is a big organization that we got to keep an eye out because they have a lot of people, a lot of money invested into what the market is gonna do. They're not so smart because in 2008, you guys know what happened, 2007, but they do have more people that are keeping an eye out, like better than us small investors. But so just keep an eye out for that. And let's continue watching that story to see what they're going to do. And for our third story, we got new law governing tenant screening fees now in effect. The reason why I wanted to touch the story is because I always like to throw in some gems that I think every landlord can benefit from. And this is one of those stories. And it says here, as of May 1st, 2024, new law governing tenant screening fees was put in motion to help protect renters and promote transparency in the rental application process. The law prohibits a landlord from charging an applicant, for a residential dwelling unit a tenant screening fee that is more than the actual cost to obtain information about the applicant. Now, the reason why I bring this up is because again, a lot of landlords take what's the word I'm looking for? They take a lot of opportunities. That's not the word I'm looking for. You guys know what I'm trying to say. They take advantage. Thank you. There you go. That's the word I was looking for. Thank you. They take advantage. I don't know who I'm saying thank you to, but anyway, they take advantage of tenants. Of course, they be charging a $50 application fee when a background check only takes about 30, 35, $40. So they keep an extra 10, which, come on, guys, it makes absolute no sense. So me personally, what I do is I charge a potential tenant, I charge them the exact amount that the background check cost me, which it ranges from $30 to $40 right now as of 2024. More than that, I do not charge. And again, the whole point is to see if they're a good potential tenant. Now, of course, if you have overhead and if you have an employee that charges for that, yeah, maybe charge 30 minutes or an hour of the employee's time. But if it doesn't cost you much to run through an application, do not charge more than that. Anyways, and that's what Hawaii is doing. Like, it looks like a lot of landlords were charging way more than that, and that's why Maui has to put this law in effect. It says here, charges that exceeds the cost of obtaining information about the applicant must be returned to the applicant. Landlords must refund the tenant any fees not used for authorized costs within 30 days of submitting the screening request. The law aims to ensure fairness in the tenant screening process and shield applicants from unreasonable fees, which again, it's a good tenant law, good tenant landlord law. It's not a law that's against landlords, really a law to protect the tenant. It's not saying that we shouldn't charge fees. It's just saying that we should charge the proper fees and return whatever was not used. So that is our three stories. We're under 10 minutes, which is perfect, which is what I really aim for, less than 15. But hey, less than 10, I think is even better because this is supposed to be some quick stories that we look at in a matter of minutes, so you guys can get the idea. I will share the links down in the notes if you want to look more into these stories. So please go ahead and read those and be sure to subscribe to our channel. We appreciate the love. I hope everybody has an amazing weekend. God bless and go